Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 199 for October 15th, 2018. The TimingResearch.com. We are broadcasting live on YouTube at 1 p.m. Eastern Time, but you can also listen to all the audio-only versions of every episode on iTunes, Stitcher, Spotify, Podbean, or wherever else you listen to podcasts. Just search for Timing Research and subscribe. But if you're watching the video, you should be seeing the PDF of this week's report on your screen right now while I'm talking. But you can also download it for yourself or get any past report at TimingResearch.com/reports. We have a great lineup for today. Two first-time guests and two who haven't been on this show for a few months. So I have Matt Buckley here to moderate, and I'm going to go ahead and turn it over to him.
Okay, thanks, David. Appreciate it. Good afternoon, folks. Welcome to Timing Research. Very timing research. Like David said, we have two new folks, so we're going to make them run the gauntlet of solitude and first-time guest on board here. We have a lot to cover, especially in this volatile week. Markets wallowing around here, really on a precipice, really on the edge of, hey man, is this, Goldman Sachs just came out and said, the selling's almost over with, which you can be damn sure means it's just about to start if you're a contrarian. So
the exact same thought I had this morning, Matt.
Exactly. All right, so let's go around the room. So we have George Papazov of TradePro Academy.com. Brad Powell of ETF Dynamics, and also Toni Hansen of TonyHansen.com. So why don't we keep that order as we go throughout our presentation today, as we answer questions, but we can always jump in and shoot the shit, so to speak, back and forth. So George, why don't we start with you give us kind of your executive summary about your background and how you ended up where you are today and what you do at TradePro Academy.
Yeah, absolutely. Hey guys, pleasure to meet you all. First time guest and top of the pecking order. I mean, you guys really want to throw me to the wolves out here today, but that's fine. I'll run with it. Yeah, so my name is George Papazov. I got in the industry pretty early. I started out getting a financial education in financial planning and was very disappointed to know that I didn't really learn much through that education. It taught me nothing about trade. It made me a worse trader, actually. Then after that, I joined an institution as a trader where I worked for about 6 years. I was on the trading desk in 2009. It's one of the top 6 banks in Canada. I saw the carnage. I honestly started my career right as the housing bubble started to crash. So it was sort of memories from that moment forward. I knew that I really wanted to help other people trade because I saw and heard the stories from our clients on the desk and what they faced. And really back then I started a blog. It was called GettingMarketMoney.com. Younger, less wise. But from there, that morphed to what TradePro Academy is. We started the business in 2012. We do education and live trading as well on futures, options, and currencies as well, depending on what market's moving. So I'm really happy to be here. I'm honored and humbled to be part of a great panel, and I look forward to giving you guys some insight on this. That's just the skinny of what I do. We trade every day, Monday to Friday, in a live room, and it's a very interactive environment.
Awesome, man. Welcome aboard. So let's go ahead and move on to Brad.
Hey, everybody. I'm Brad Powell with ETF Dynamics. I've been a pro trader for about 20 years, or trading full-time for about 20 years. I grew up in the markets. My father was president of retail of a very large brokerage firm and started literally trading stocks when I was about 8 years old. In the late 90s, I started doing it full-time. And I've been with a couple of companies. I've developed always in divergence-based strategies, automated futures programs, and in around 2010, really recognized that the ETF market starting to explode. So we founded ETF Dynamics. Was with a company called Right Angle Trading. We changed it to ETF Dynamics, and our primary focus is divergence-based strategies for ETFs. We have a daily alert service for swing trading and offer free market education through a variety of ebooks and live webinar series.
Okay, great. Looking forward to hearing from you today. And then, Toni, why don't you give us that executive summary about your background and what you do at TonyHansen.com?
Okay, hey guys. I'm pretty sure you're not supposed to be legally trading when you're 8 years old, man. How'd you get away with that?
My dad placed the trades for me. He'd let me kind of pick stocks. I'd go to his office with him and say, okay, I like this one. And he'd throw, a couple of $100 at it. So.
Nice. Well, I did not get so lucky, but I started off in the mid 1990s, right when online trading was getting started. And basically, I've been full-time since then. So yeah, I have my site is ToniHansen.com. So if you can spell my name properly, you can find me. I do a lot of different types of market education. So I started trading full-time, like I said, in the 1990s. And after about a year or so, another site that was doing a lot of education at the time was following kind of like the older version of a blog that I was doing, asked me to write a swing trading letter for them. I thought, hey, I'm doing all of this research for myself already. Sure, why not? And it kind of went from there. So got into education around the same time that I started trading. And I really think that's a huge part of my success because I had to explain to other people what I was doing and logically explain it and make sure it actually followed through properly. So that's a little bit about me.
Excellent. Good. Well, it seems like we have some 500-pound heads here, which is going to be good because it's going to be needed with everything that's going on in the market. So David has the forecast kind of pulled up and everybody's answers there. So George, let's kick it off with you. I like combining the first couple questions together because it kind of makes sense. So based on today's open, where do you think we close on Friday? Higher, lower, and what's your delta? What's your percent certainty on that?
Yeah, absolutely. So we're looking at the markets here on the S&P 500. This selling started to feel very reminiscent of what the 09 selling felt like. I think it's been a while since we've seen algorithms turn to the sell side. We've seen a lot of sell programs. We trade a lot of order flow at TradePro Academy. So being in the trenches and seeing that momentum, it looked real to the downside. I do think we have an early week reversal. So we're going to get a little bit of buy stops to push through. And midweek, we have a really big Fed announcement, or not announcement, but the meeting minutes of the September 25th, 26th rate hike meeting. So I think midweek reversal, upside until midweek reversal, close down to probably around 2,700 at the end of this week. That's what we're looking at.
All right, so George is with a closing to the downside. What's your probability? What's your delta there? How confident are you?
Man, this is going to sound really strange, and I know that you guys are we have a good swing trading crowd as well, but as a day trader, I could always tell you my confidence is always 0 and 100 at the same time. I look to see a lot of the momentum and the price action, so a lot of times we'll be dead wrong on the forecast, but still be able to be on the right side when we see that transition. I'd say probably around 40% to 50%. I wouldn't put all my money there.
Well, it's nice being able to be wrong and make money at the same time. I like to use one of my examples is the Brexit. I got that wrong. I thought they'd vote to stay, but we made printed money trading volatility going into the vote, and then the volatility smash out of the vote. So I like the way you said that because you like making money when you're wrong.
Yeah. I mean, absolutely. I just want to mention one thing very quickly. I always tell people it's being right doesn't make you any money. Being right is a self-fulfilling kind of an ego-driving thing. I've called my phone company and said, can I pay you with the right currency that I have? Like, no, we take cash, man. So.
That's exactly right. Yeah. All right, Brad, how about you? Where do you think we close by the end of the week, and how confident are you?
I'm going to be somewhat contrarian. I think we're going to close up. I see warning phases. See us potentially in a warning phase. I think it's very similar to what happened, back in March. We get some pretty heavy selling to the downside. We hit the 200 moving average, kind of bounce around there for a while. I think it's going to be a choppy ride. But time and time again, people start to get bearish. We see shorts piling on and the market slams higher. I don't think we're going to go much higher this week, but I think we're moving into a strong period of seasonality. So I'm looking for a close possibly 2780, but we may go down and test 2700 first.
And how confident are you of that?
100% that I'll be right or wrong.
Man, both you and George need to run for office.
yeah, that's right. We'd make great politicians.
Jeez, that's great.
I would say I'm about 55% confident on that. I just look at indicators and then take into account seasonality. I think the wild card is we're going into earnings season, and I don't think anybody cares what last quarter's earnings were. I think it's all about what impact will tariffs have on earnings going forward. And this week we have Netflix and IBM, and I think those will be huge indicators for what we see over the next few weeks.
Well, you see, and I don't want to steal my own thunder in a little bit, but we've seen, I mean, Bank of America today, we saw Jamie Dimon and JP Morgan on Friday, and they did some pretty good work. And they had every opportunity on those calls to say, hey, we did good, but the future's cloudy and trade wars, ooh, and they didn't. And the market didn't rally off of that. So that's going to be interesting. And we'll get into that in the next round. So, Toni, how are you feeling about the market this week? By Friday's closing bell, higher, lower, and what's your delta?
Right. Well, I'm not running for office here this year or anytime soon. So I am actually going to go with
I'm looking for a vice presidential candidate, Toni, for the next election. Exactly. If you want to join me.
Right. Well, okay. So I'm kind of like all over the map there. So, well, as far as the market goes, though, I actually think we're going to go lower. So, heading into this month, I've been pretty bearish. I run a part-time trading room. I've done this for 18 years or so. And we've been tracking, as you guys mentioned, the momentum going up into the highs over this last month. And now what we're seeing is a pretty big sell-off. But you'll notice that even though we are getting a little bit of support here this week into the end of last week, we haven't really had much of a bounce. I mean, it's just really slow, really gradual. To me, it feels like the market wants to retest those lows. Even if it tries to hold here for a little bit, I still think we're going to try to see those lows retested.
I think, and getting to go last, I get to say either everybody's right, everybody's wrong, and I'll give everybody a little bit of credit on that one. That's the benefit of being the host. Real quick, though, I forgot to introduce myself, folks. My name's Matthew Buckley. You guys can call me Wiz going forward. I earned that call sign flying the F-18 Hornet for the Navy for about 15 years. Graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and did a couple combat sorties over Iraq. But I taught myself how to trade equity options and stock back all the way in the day. And to Top Gun options, I kind of apply, what I learned flying fighters to my trading, having a strategy, managing risk. That's the biggest thing. People laugh like, oh, you're a fighter pilot, man, what a risky. Hey, man, we loved ourselves too much to go out and get killed or to get smoked. So it was all about managing risk and trying to win. So real quick, that was me. I forgot to introduce myself. Duh. But I'm gonna have to side with Toni on this one. We're in a couple minutes, we're going to get into what's on our individual radars for the week. But man, this just doesn't feel, after 3,000 hours in the F-18 or close to 3, you felt the jet. You could feel certain things, and I can tell based on kind of everybody's executive summaries here that you all have some pretty good experience as well. It just doesn't feel like this thing's we're kind of hanging on, especially at the S&P 500 here at the 200-day moving average by the skin of our teeth. I mean, somebody says boo, and this thing is one tweet or one lower third on some TV show of heading lower. So I think we're lower by Friday, and I'm going to go with a 0.8 delta. I mean, I'm pretty, and I'm usually Mr. Eeyore, and lately I've been Mr. Bull, but now I'm back to being Mr. Eeyore. So, all right, so George, let's go back to the top of the batting order. Having said that, you say we're lower between 0 and 100% certainty. What and you mentioned some of the Fed minutes and stuff. What else is on your radar this week that drives you to believe that we're going to be closing with at the end? You said about a 40% certainty of lower.
Yeah, for sure. Thanks, Wiz. I just see a lot of headwinds. So, I mean, looking at some of the momentum and order flow, you're seeing the bid a little bit lighter to the upside, and then when you hit some of the key resistances, you see a lot of offers start to plow in, they start hitting bids, bring momentum down. But overall, like the headwinds I'm seeing here, to the positive, to the bull side, let's start there. I'm seeing a lot of good earnings and even a good banking sector earnings in a situation where we're seeing interest rate hikes. even that's not being taken into account for the financials. And we've seen lower on Bank of America this morning. It got sold off. In addition to that, and I know this is surprising to a lot of newer traders, obviously wouldn't be surprising to anyone on the panel, but you're seeing global markets down, and they've been down 2018. When you run down the numbers, USA was up based on their key markets, but every other market, Japan down 5% for all of 2018 so far. China 22 officially in bear market territory. Emerging markets 17%. Eurozone over 10%. So when you see these global markets start to trend lower, and they have been trending lower, you saw a little bit of divergence there, and one of two things was going to happen. The S&P 500 was going to catch down, or all global markets were going to rally. So that's one thing we're watching very closely. On top of that, these trade war escalations, and this is a little bit of a bold statement that I know some people are going to call it out on, but I think the United States and China having a deficit together in trade has actually been helpful, because what happens with China, they'll export all these goods, get US dollars back, and then in turn go and buy the treasuries. So it's been funding a lot of the government obligation. So that's something to watch for, and how it's really going to impact inflation. Trade war is going to potentially push prices up a little bit higher. Now you have the Saudi Arabia journalist thing coming out. It's going to impact oil prices. Fed's unwinding their balance sheet. The ECB is closing off their QE. I mean, I don't want to sound like I'm not a doomsday caller. Look, in 2009, I saw a lot of people get hurt. And unfortunately, I think that all this is leading to some longer term potential downside. But remember, 0 to 100% is my confidence.
You nailed it, man. Exactly right. Well, it almost does seem, George, at this time, especially when you look at the S&P 500, this 200-day moving average. I mean, we broke the 50-day with some serious airspeed. And I like to call it, between the 50-day and the 200-day, no man's land. It's like trench warfare in World War I. Nobody, the Allies, and there's the Germans, nobody, either those were magnets. So it does feel like we're kind of hanging on a precipice here. So I like everything you said. Brad, what's on your radar for the week that drives you higher, actually?
I'm going to watch in the technology sector. So I'm really closely watching the XLK and the XLY ETFs to kind of see what they do. I think those are the two sectors that would lift us higher. Consumer discretionary, because we're going into holiday spending period. And technology, just because it got really beat up. It's deeply oversold. So if those two can mount a rally, I think that's what's going to lead the markets higher. I mean, George brings up a lot of good points. There are a lot of negatives out there right now. But I tend to be a little bit contrarian. So when I see so much negative sentiment out there, I tend to think we'll get a whipsaw to the upside. Again, I could be dead wrong on that. I'm looking at, we're definitely in a warning phase. Very simple indicators that I use. A 21 EMA has crossed down below the 50 EMA, but they're both still over the 200 EMA. As you said, we're kind of in that no man's land between, the 50 and 200. But, we definitely caught a bid Friday. We'll see what happens tomorrow. I think tomorrow is going to be a really critical day. But it's still very reminiscent to me of March, April 2018, when we flirted with breaking below the 200 for several days and then rallied back up.
Now, since you're an indicator man, and I'm not Super Joe technical analysis indicator guy, but so we busted the 50-day with airspeed on the, and I'm an S&P guy. We busted the 200, but we came back up to it. So Brad, what's the next, let's say all hell does break loose. What's the next indicator underneath the 200-day moving average? Because I'd like to know, because I haven't seen below a 200-day moving average to the S&P in a while. Is there another support level under that would be a target as a bottom? I
mean, I'm looking at 2690 as a potential bottom, just because that's where we hit in late June. And it was also tested in late May.
Okay.
And 2700 kind of held. I mean, so that 2690 level, if that breaks, I think we'll see a pretty swift move down to 2550.
Well, it's interesting, and I was just I'm just looking at that when you look at you're right. The end of April, beginning of May, we kind of had this it's kind of a drill bit, you know, like a deep oil well. We held the 200-day moving average there. We had a little bit of a like panic through it, but looks like we solidly held that. This looks completely different. I mean, this is kind of freak mode and hanging on by a thread here. But okay, Toni, what's on your radar for the week that's driving you to your decision?
All right. Well, for one thing, you know, you guys are talking about what has happened here back in March and such, but you know, oftentimes the market, if it does something one time, it might repeat it a second time. The third time, it's much less likely to repeat it. So like every single time we are getting these massive sell-offs, the next time around, it's more likely to react completely differently. We even saw that back at the beginning of 2018 this year when it had the first sell-off going into the start of the year, fell again just a couple of months later, and how that move to lows and recovery like was completely different than the first drop. And so when we go and look at history and the larger corrections that have happened in the market, it's really common to see a couple of these kind of punches to the highs, but when it whipsaws back more than one time already, it gets to be a lot more difficult the next time around. And we've already seen a market that has been rallying so strongly for years without any major yearly correction. And that's really unusual in history. I mean, I've been trading for over 20 years and I've seen a lot of market tops. And what we're looking at right now is a market that is extended. When I'm going through looking at the S&P 500, I usually like hone in on what the most liquid securities are, the most widely followed. Every single weekend, I'm drilling down, going through each and every one of these, and all of them are having like these blow off highs. Does that mean that they can't go higher? No, but I think that and when we're looking at the monthly time frames, we are at zones that we should be starting to see some more major corrections in these markets. We might be getting a couple of retesting punches at those highs, but overall, I think we're looking at a longer term correction coming up.
And it's interesting you say that, Toni. When I make it back up to Chicago every once in a while, I help run Peak 6 Investments, one of the largest volatility arbitrage firms in the country. And a couple of years ago, in the middle of this massive bull market you talk about, one of my buddies, we looked at over the training floor. He's like, this is what scares me is the fact that we have 27, 28, 29-year-old kids running big books, and they've never seen a down market.
Exactly.
You know,
cryptocurrencies in a nutshell. Sorry to cut you off.
There you go. No, that's even scarier. Is things only go up, right, until they don't, and then we have I'll call them kids. I'm probably the oldest one in here. When they haven't seen a panic yet, or they haven't seen when there ain't no liquidity, there isn't anybody on the other side of that trade. So it's interesting that you bring that up because, and even though this looks ugly, that the chart from last week, this wasn't panic. This was kind of orderly, and as all the panelists know here, this was a lot of algos. At a certain point, the HAL 2000 takes over and says, all right, at this point, we just got to dump some stuff.
And Matt, can I comment on something Toni said? Toni, I agree with you entirely about we are going to come, and what Matt says is very interesting about traders. It was the same thing back in 2007, 2008. You had people who had never really seen a bear market. Everybody was jumping into online trading, buy. And they had no idea what was going on when the Dow was down 1,000 points, 500 points every other day, But I agree with Toni. We are going to see a larger correction. Personally, and the reason I'm still kind of cautiously optimistic, I think that'll come in the spring and into next summer.
Yeah, I think it could take a little bit of time to play out. But I mean, I remember 2000. I remember when that formed, and I was surprised it caught so many people off guard because I'd only been trading for a couple of years back then, but I had seen all of the internet.com craze stocks, and I'm looking at the NASDAQ, and it's a larger time frame, but it's the exact same pattern as all of those crazy run and dump stocks. And then you look at the Bitcoin going into the end of last year, I'm like, oh my God, this is the same thing. It's going to crash just like the NASDAQ did in 2000.
Marijuana stocks.
Exactly, right?
Right.
It's repeating the same thing. It's just a much larger time frame, so it takes much longer time to play out. But
there is a huge difference between the dot-com bust and the financial crisis, and that's that, especially in technology, earnings are still strong, and ultimately that's what's going to drive the markets.
Well, it's absolutely so. Agree with both y'all. Here's what's completely different about this time around. Barack Obama had zero to near, I'll say, negative interest rates, and a Fed that physically was printing money, $85 billion a month, and pumping into this market. So love or hate Donald Trump, the way he railed, the guy's a New York real estate developer, and he talks like one, calling the Fed chief or the Fed crazy. Man, if you watched Jeffrey Gundlach from Double Line Capital last week, he said, the president's kind of crazy like a fox, because he's right to blame the Fed a little bit here. So we have a good economy. Now they're going to start cranking up interest rates. So not only are they cranking up interest rates, but they're trying to unwind. I lost count. I stopped even looking at the Fed's website at what, $4.5 trillion?
$4.5 trillion. Yeah, I think they've won around 80 or 100 so far.
So they're doing both. So like I said, love or hate the president, the guy's kind of got a point. He's like, hey man, every party's got a pooper, and here comes the Fed. And it's a Wall Streetism for a reason. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. So that's and it's interesting because the Fed chief has kind of been quiet, but I think let me share my screen. I thought some day this week, and Brad or George or Brad, one of you guys brought up the fact that we get the Fed minutes on
Wednesday.
But you know what? It seems an hour is a year in this market. It's like dog market. So I don't even know if these are going to be valid. Because last week we had the president. He was more or less asked, "Are you going to fire the Fed chief?" I'm like, "Holy crap, man! Here we go."
Well, did you hear Janet Yellen?
The interesting thing about the Fed right now is they've raised rates. They are unwinding. But if they see us going into a recessionary phase, they actually have room to maneuver now.
Correct.
They can stop unwinding temporarily. They could pause interest rate increases. They could even cut by a quarter point. They actually have room to maneuver, which 2 years ago they had no more room to maneuver in.
No, I mean, what were they going to do? Who was it? The Fisher or the Dallas dude, whoever it was. He famously said, "What? There is no plan B."
Right.
Right.
When
the gun runs out of ammunition, you got to stop to reload it, right?
Yeah, exactly.
Right.
Well, and in the meantime, the barrel is melting. So let me give you a quick brief on what I'm looking at for the week for my lower. This is a big deal, folks, and I predicted this last week because at the beginning of last week, not too happy with the president and his response to this missing journalist. This isn't even. I don't want to give credence to it. This is James Bond stuff. Journalist goes into a building and gets decapitated. The Turks had that place bugged, and now they're saying that, well, the guy's iPhone recorded everything. They're just using that as a lie. The dude was dismembered, taken out. The president knew all this last week when he started doing, we'll look into it or something like that. And I think that same day, Treasury Secretary Mnuchin said, I'm still going to go to this event. The Saudis got a huge investment conference at the end of this month. And I predicted last week, I said, not only do we need to short Raytheon right here and the defense stocks, but Mnuchin ain't going. A couple of people on social media gave me a lot of grief. Now today, Jamie Dimon said he's not going. A bunch of people are bailing out of this conference. It's going to look stupid. Mike Pompeo, the Secretary of State, is, I don't know if it's today or whenever, the president said, go on a plane and go talk to the king. This is a big deal, folks. So this is on my radar for the week. The president's got some egg on his face. $110 billion defense contract, and that was a massive lift to the overall market too. When you got a Boeing, you got a lot of Dow Industrial, a Boeing in there, General Dynamics, a Raytheon, all these guys going up. That's we got to watch this because this could be one of those things that kind of pushes us over the edge. Because last night the Saudis kind of poked us back to saying, "Hey, you guys do anything, we'll retaliate against you." What are you going to do? Send 15 hijackers and kill 3,000 of our countrymen? You already did. So the interview last night with Trump was not good. We still have a lot of trade tensions with China. There's a meeting this week. I had my flight schedule up. I forget which day it is. But we have a global thermonuclear bomb that we can use in our trade war with China. If you guys remember, Trump campaigned nonstop on day one. Huge. Nobody does day ones better than me. Forget about it. That he'd labeled China a currency manipulator. And he didn't, and he still hasn't. So this stuff is definitely on my radar. And the tech wreck, where is it? The tech wreck, just Amazon is not looking good here, folks. I called a ledge in it last week right here. And a lot of people, some of my members were like, wow, look at these bull put spreads out to next week. They're meaty. I'm like, hey man, the options market ain't stupid. You're getting paid to take on risk. And I think this is a dead cat bounce. So, and it's interesting. I was just watching the lower third of CNBC was Admiral Stavridis on CNBC, who's saying, hey, this Saudi Arabian thing hasn't even started. So there's a lot going on. And like I said, this is kind of dog market. One hour in this market is a day. So there's a lot of stuff on our radar that at least here at Top Gun Options we're watching. And I think—
So Matt, something a lot of people, I mean, that we haven't mentioned yet is, what does everybody think about midterms and what their impact will be? And granted, they're a couple of weeks away, but
that's a great point. I'd even bring that at lower on my list, but it's funny you say that, because on my 2-week out radar, we have on November 1st, we haven't even talked about the O word in here, oil. We have Iranian sanctions kicking back in, and that ain't exactly going to be the production of Annie on Broadway. It's going to be absolutely crazy. So it's rare. And you can mark the date and time when I say I don't know. I think the bias is lower, man, and I don't want it to be. I talked to some of my members on Friday on just getting some SDS, buying some ProShares ultra short calls,
right,
and setting it and forgetting it, man. And I call this kind of a popcorn market for right now. If you don't know not doing anything's a trade. So sitting on your hands might be the best thing to do this week, and grab some popcorn and just watch. Because it sounds like for George, Brad, and Tony, this is all it's Captain Kirkish right now. But we're boldly going where nobody's gone before. So let me get your thoughts on all that verbal diarrhea. George, any thoughts on any of that?
Yeah, I think the one sentence you said was gold. I mean, it was all good, but the one sentence that you said, not being in a trade is oftentimes the best trade. And I've never lost a trade I've never taken. I can't say that for the ones that I have.
Oh, and, dude, I am totally stealing that one. That's mine.
Yeah. That is a great one.
It's trademarked, guys. Come on, it's even recorded. I'm just kidding. But honestly, go for it. And I know that you guys know the feeling, being around the business for a long time, right? So as I say this bearish bias, and as I kind of identified all the headwinds, I'm looking at these shorts, but I'm doing it careful, and I'm still nervous. I'm nervous to be short, and I'm nervous to be long here. Yep. And I think I'm seeing that same sentiment in the market. As we talked, we just dropped 6 handles on the spoos and rallied back up 8, like it's nothing. And in August, I would have killed people for that kind of volatility. I wouldn't have really. Yeah. But anywho, so what I'm seeing here is you mentioned it, Wiz, as well, coming up in November. The first Friday, we also have non-farm payrolls. That's going to tack on importance to that. So I think October statistically is a bearish market. If you look at the last 20 sell-offs, I think something like 8 or 9 of the crashes happen in October.
Mm-hmm.
But so I don't think any of those happened in a midterm election year, because the midterm elections are generally give the markets a bullish bias.
Yeah, you're right. So it is unique in that situation. And also, I think Brad mentioned the tech stocks. I'm watching that very closely, because if they continue to go up, they've been leaders. I mean, anyone that's been trading for more than a couple of years know the tech stocks are leading the way. If we see a rebound, it's going to have to happen in tech first. Watching that a little bit closely. But Wiz, finish off my little 2 cents here. You're asking for levels on the S&P 500. Yeah, I don't want to scare the crap out of you, but I'm looking at 2,400 based on the fact.
Wow.
Here's the thing. 2,400 sounds nuts, but if you look at the 2009 trend line, that's just a reversion to the mean. We could drop to 2,400 and still be bullish. Yeah. So, I mean, I'm not saying it's going to get there, but I am looking at some balanced risk here. And I haven't been as confused as I have been the last couple of days, to be honest. But
before I move on to Brad or Tony to jump in on any of that, did you hear what I said? Did you hear what George said? I mean, this ain't our first rodeo, folks. So to the retail folks listening here, man, let me use an airline analogy. When I fly with my kids, we're actually flying up Friday to see my oldest son play some hockey up in Vermont. If we enter turbulence, my kids usually look at me, and if I just kind of give them the little bit of a head shake and keep drinking my Bloody Mary, they know nothing. But if we're in turbulence and I reach over and I tighten their lap belts, that's when they should get nervous.
Yeah.
So it sounds like a couple of us are want to tighten some lap belts for some retail folks. So I think it's great, George, with the whole, hey, I've never lost money on a trade I didn't take. So Brad or Tony, why don't you jump in on some of this?
Sure. Well, I mean, I think one of the things that's interesting right now is that this market is scaring a lot of people. But at the same time, this is usually a pretty good market for swing traders, because with this added volatility, you've got a lot of pivot type moves off of support and resistance. And if you can nail those down to intraday strategies, you can do really well. And you get a lot of like the 2-wave bounces back and forth in the market. You've got all these Elliott wave guys that are going for like, it has to be 3 waves up, 3 waves down. No, in this type of market, you're looking for 2s and 2s. And if it's trying to go for a third move, you're more likely to have momentum that's going to be stalling, trying to actually create a reversal strategy. So this is a good market for swing traders, but I'm one of those traders, I like to base hit. I'm not going for like full home runs every time. And so when I'm going into strategies intraday, I might say, hey, you know, this strategy has like a 50-60% chance of success, but if it works out, I'm going to get like 4 times what I'm risking. So if it goes 1-to-1, I'm taking something off. So yeah, I might not make as much as when it goes like the full 4-to-1 what I'm risking, but at the same time, I'm consistently base hitting. So even if the market turns against me, I'm going with like, well, what are my odds on this particular strategy? And how do I basically keep it close to a scratch if I'm wrong? And that's, I think, the big difference between a lot of these newbies and like those of us that have been around for a while, is that we adjust to the changing risk circumstances and profiles a lot faster than other people do, where they're going for like home runs every time, and just 1 or 2 stops really just slams your confidence.
Well, exactly.
Right.
I mean,
you bring up a good point, Tony, and that's, I mean, we've seen so many buy and hold periods through this bull market, and I think we are entering a swing traders market where you're going to have to play from both sides of the market. I'm still cautiously optimistic. You know, I'm looking at an XLK chart right now. Technology has been a leader. It has to continue to lead. It went hard under the 200 last week on Thursday, and then rebounded sharply through a real important support resistance line, and has stayed above that.
And that's where like these people are getting rewarded for bad trades in this market over the years. And now they're going to find out, hey, things don't always just bounce back all the time. Well, they might to start with.
You're talking about millennials, right?
Right.
Well, yeah, everybody gets a trophy. And you know, we kind of had this Bernanke put, we had this Yellen put, you know, this kind of belief that, you know, things aren't allowed to fail, you know, as a recovering Catholic, I like to say it's like the Pope came out and said, hey, folks, hell doesn't exist. And then everybody, you know, goes full nuts here. Let's stay on this topic, though, because first question, let's go George, Brad, and Tony. First question I want to ask you, George, is first of all, can we recover without tech? And second of all, what's your short-term tactical view on tech? Is the tech wreck continuing? Is the tech rally over? And do we need it? Both questions.
Hey, Wiz, I missed the last couple words, but I think I gather the question is on the tech side. Can we recover without it, and do we see a likelihood of it recovering?
Yeah, or yeah, are you short term? What are you short term on tech, and do we need it to live, so to speak, and to bring this market out of this doldrum?
Yeah, a few things. So that's actually a very good question. I think that's the big question right there. Of, is this just a selling dead cat bounce, or is this a good buying opportunity? And we got to look at technology stocks and look at the volume. If we see some upside in tech stocks with volume coming in, you know that's institutional money. I'm following the Commitment of Traders report very closely in NASDAQ. And if I see institutional money coming into tech stocks, you know, that's the early sign of a potential rebound. And
George, can you brief that again real quick, but slower for the retail folks? What's that report?
Yeah, sorry. It's called Commitment of Traders. So it's a report published by the CFTC. And it shows you institutional positions. So anyone who's deemed to be a large trader, it's not based on pounds or kilograms, it's it's position size. So any large trader that has large spec has to report. And you see this report come out every Friday for the past Tuesday and a week before that Tuesday. So it lags a little bit. But we saw an outflow of institutional money from the tech space, primarily NASDAQ. And I'll tell the listeners one thing that I've learned that any kind of institutional trader knows. It's really easy to accumulate a massive long position. And when you look at what's happened, a lot of funds' top 10 holdings are in tech stocks, but it's a nightmare trying to unwind
it.
Yeah, when there's absolutely no bid. Nobody's buying it. Who are you going to sell it to? And that's why prices get more.
You were making the market. Now you got to try and unmake it with yourself.
Exactly. And now you need financial media to help you out to get retail on the buying side so you can sell it to. But you look at the COT report, Commitment to Traders. I watch that very closely. We review it with their team every Sunday in a live webinar. It's a really good indication. It's a little bit late, but it keeps you on side with the institutional money. And last week it left NASDAQ. I'm very curious to see what it does this Friday.
Any sector rotation out of tech, George? Where do you think it went?
So that's actually a really good question. I saw some of that money on the COT reports going into gold. And I think the other aspect of it is I noticed a lot of money flowed out, but we didn't really see it rotate into anything, which means it could be cash on the sidelines waiting to buy. And in this case, if NASDAQ starts moving up and you see volume, that cash will make it back into the market, and then we're going to get a rally.
That's really interesting. You brought up gold there, because we did see a rally in gold here over the last couple of days. But at the same time, if you look at some of the bigger time frames on gold, weekly charts, there's still wiggle room on the downside on those. So people, there's like a short little bounce in gold, but I'm not seeing like a full commitment to it yet.
Yeah, exactly.
Right. Well, historically, gold, though, is a hedge against inflation, right?
Right.
So we don't know. Inflation is still low. It's still within the Fed's target rate. We don't know what impact trade wars will have yet on inflation. Theoretically, it's going to drive inflation higher, but it hasn't to date. So I think that's why gold hasn't caught as much of a bid lately as you would expect.
Toni, do you trade the GLD, or do you trade the miners, or do you trade gold at all? Or
I do. I trade futures. Yeah.
So that's why you're seeing that short. So it sounds like it's decisive right now.
But there's no like major commitment to it at this point. It's just like short-term little bounce, and I'm like, okay. And it's really interesting because as the market has topped here over the last month or so, gold has been incredibly indecisive. Like it'll give you like a short-term pattern one way intraday, then turn around the next day with very, very little daily follow-through. And even the little bit of daily follow-through that we saw last week is still, it's not coming in this week, So it's like nobody really wants to touch it right now.
It's interesting, Brad, you nailed it. I mean, gold, you read in, Wall Street 101 that gold's a good hedge against inflation, but it doesn't seem like it's performing. Here's what I always I tell my members: if a stock, ETF, or whatever isn't doing what you think it should be doing, you're wrong, not it. That's the price of it.
Right.
Exactly.
That's amazing.
Yeah, whatever.
That's amazing.
That's like George's blinding brilliance. But it's sometimes these, I call them MOTO, master the obvious statements, you really need to listen to, because Toni, you nailed it. I've seen some people talking about GLD. They're like, well, it's just not doing what. I'm like, then get out of it. Why are you doing in something that, it doesn't make sense. Let's get back to the
I used to trade silver a lot years ago, 4 or 5 years ago. The AGQ ETF, and it's just been dead, forever. Like, forget it. It's not a good market to trade. It doesn't ever do what I think it's going to do. And so stay out. When something's doing that, stay out, stay away. It's not worth the risk. You said it, nailed it earlier. Yeah. It's all about controlling risk.
Let's, Brad, let me stay with you then. Let's finish up, and then, Toni, you can give me your thoughts. What the tech, do we survive? Does this market go up without it? And where's your short term? Where do you feel short term?
I don't think between now and the end of the year, I don't think we can rally without tech, because they have been the market leader. Financials haven't really had a huge rally. The most surprising sector to me is the energy sector, with oil back up at 80, hasn't really had a huge rally that you would expect. So tech is that, and I think that's because all of the money has been going tech. I do think there are some sectors, the energy sector and basic materials, because Congress, after the first of the year, should start retackling the infrastructure spending bill. So those are sectors that could take over as market leaders. But for now, I think everything hinges on tech.
Yeah, well, it's like George and I were talking about that money had to have gone somewhere. I mean, Amazon just doesn't absolutely implode like that, do that little dead cat bounce without that cash going somewhere, either sitting in GLD or cash is a position. Toni, what do you think? Do we get off the mat without tech? And what's your short-term view of tech?
Well, yes and no. So
now you're becoming a politician like the three of us.
Right? I told you I wasn't going to go into politics, man. And
you said never, Toni.
That's what you get for hanging out with me and George.
Yeah, 45 minutes later, we've turned you into a politician.
Exactly.
Well, I mean, I feel kind of like I did going into this last month. I told my members, I'm like, I don't think the NASDAQ's going for new highs, but this S&P and Dow, they can certainly still try here one more time. And that's kind of how I feel now. I feel like, yeah, the tech would need to rally in order to bring up the overall market with it too, but they're going to go hand in hand, but not like to the extreme. I have more of like a blow off type of feeling with a lot of the tech companies than I do compared to like the S&P 500. And so I think when we're looking at like corrective values on things, I think it's easier for tech to continue to have more of the free fall moments than we might see in a lot of the other sectors. So that's where I'm standing, like both yes and no. I mean, I think, yeah, tech's going to bounce as the overall market bounces, but I think that the overall market could stabilize easier than tech. Here's
what I love all that. Literally this time last year, I predicted the tech wreck or a FANG implosion. And it was right around the time that Mark Zuckerberg uttered these famous words, which, the cheerleaders on like a CNBC, the only person they'll ever let talk bad about Facebook or tech is Jeffrey Gundlach, because the guy swings around, $100 billion in double line capital. But this time last year, Mark Zuckerberg said this famous quote. He's like, I don't care about profitability. I just want to do good. I think I spit my coffee out on the computer. I'm like, Gordon Gekko is like, his face would have melted off. Hey, Robinhood, if that's what you want to do, put on your tights, take your company private, and pay me. But you have a fiduciary duty to make money for me. I just love channeling Gordon Gekko. So tech short term, to me, it's over. A couple days ago, I actually funnily posted on my Facebook page, Mark safe from the Zuckerberg purge. The other day, 800 accounts with just millions of followers. Google the other day said it's going to pull out of a multi-billion-dollar defense contract because the Pentagon, you ready for this? The Pentagon isn't aligned with Google's corporate values. Are you shitting me? This is the Google that can't be in China, or if they are, they put spyware in all their stuff. You can't make this up. So I don't know how getting rid of tens of millions of eyeballs that can be looking at ads. And Zero Hedge had a great article the other day, like, hey man, we're really, oh, and by the way, government, and as Jeffrey Gundlach said about 4 months ago when he got bearish on Facebook, he said, when the government comes in with their size 12 boots, they either do nothing or they do everything. So this, I just don't, I feel that the heydays are over. Look at Twitter. I mean, Twitter. It's
like you're throwing your hands up in the air and saying like, I don't know, WTF what anymore. Like you've got Tesla's CEO coming out like, what the? Like you don't even know what tweet is going to blow things up anymore right now. So
correct.
You don't want to put your life savings into the hands of some crazy Twitter guy you don't know.
Well, exactly.
But short term, a lot of people. I personally think millennials. We talked about these 21 to 28-year-old traders who have never seen a big crash. They're probably sitting there saying, wow, what a great time to buy Facebook. Wow, what a great time to buy Amazon. So we could see Snap, another.
Like Snap. Who said that, George? You beat me to it. Exactly. Yeah. I'm down here in God's waiting room in South Florida, but a lot of the young hip professionals, what was it?
God's waiting room?
Yeah. So God's waiting room, all these.
Never heard that.
having drinks. They're like, oh yeah, I'm in Snap and I got in the IPO, and I'm like just sitting there as the old creepy guy at the corner of the bar going, that stock's going to be at zero, and it's pretty damn close. I tell my members to stay away from activist CEO. Where are the old CEOs that are like, I want to make money, print money for my shareholders, not all this stuff. I mean, the Nike, this is funny. I had a my son had a hockey tournament on the west coast of Florida, and they have all those outlets over there. We walked right past Nike. We went right to Under Armour, and I spent about $400. Can anybody explain the math to me that this, and I love the whole answer, like, well, they're an international company. I'm like, okay, so that $400 in revenue was offset by sales in their store in Senegal. I mean, I don't get why these companies do this stuff. So my short-term answer to the tech wreck is it's going to continue. It hasn't even really more or less started yet. If Donald J. Trump, like I said, love or hate the guy, leaves Twitter, the thing will be at zero. There's no reason that even exists. So my opinion, that was I took up a lot of oxygen in there. I don't think.
But right. So, but for all of these names that we're talking about, my barometer is my 19-year-old son, who's a computer science major at Cal Poly. And he said to me 2 years ago, Snapchat sucks. Nobody likes it. Okay, I'm never buying Snap. Right there. But for every name we're trashing, Twitter, etc., which I agree, they're horrible companies. They're not going to make huge profit or grow profits, but you have Microsoft is doing well. You've got Google still printing money. You've got Netflix growth. And this, I think Netflix, their report tomorrow is going to be the most interesting to me tech earnings report of the season, because we need to see, are they now not burning cash the way they were? Are they still adding subscribers? And so are they going to go into potentially a new growth period?
If they don't, in my opinion, if they don't absolutely knock the cover off the ball, it's bad news, in my opinion. But all right,
so that's the one I'm watching tomorrow. And if it's strong, then I think XLK will lead us back higher this week.
Two things I think, Brad, you were talking about. I love the energy idea. So we're long ExxonMobil, and then the infrastructure. You're right. We've kind of been moved to the back burner. I think that's going to hit again at the beginning of the year, and we're long CSX as kind of our infrastructure play. All right, let's go top to bottom, guys. Since, man, that was great. I love it. But I always like to end these things with getting a free trade from everybody. So I want to go top to bottom. George, Brad, Tony, give me something you just really love right now, either short term, long term, or medium term. What do you like? What are you talking to your members about right now?
I'll start.
Yeah, go ahead.
Oh no, we're going in order. George, go ahead. Sorry, there was a pregnant pause there.
Motivated.
I thought everybody was thinking, so I was like, "Oh, I'm ready."
Yeah. Well, so there's a lot of stuff that I look at. We do a lot of day trading, but also swing trading as well. And I would say the trade of the week that could possibly extend that a little bit longer is look for a midweek fade opportunity. So at this point, nothing wrong with being in cash and waiting for the next bet. I think it's too late to get long on this little bounce, but it's too early to be short. So that kind of puts me on the sideline, outside looking in. So I'm looking for a midweek potential to get into a short on the S&P 500 to see if this momentum carries out to the downside after we see what the Fed does. And then if we do get downside continuation on volume, I'm looking to possibly get long some gold as well. I had an order at 12.11 this morning on GC on the futures. Obviously, it didn't fill because we're trading $30 higher, but it's down there. So those are two things I'm looking at the moment. And I'll tell you this. I think Toni mentioned this, and I don't want to give you a very drawn-out answer, but I think she gave gold for the listeners, saying that she's not looking for home runs, and that's what we do as well at TradePro. We're looking to make small moves with high probability and consistency. And if you want to make more, scale the size, not the magnitude of the move. Because if you're looking for 10 handles, and I'm looking for 2 on the S&P 500, I'll get 2 every single time you get 10. The opposite's not true. So that's kind of where we're looking. We're in a very interesting spot for the listeners. And I think you got to watch tech and volume and some of these earnings, and then you'll get a more clear direction.
George, which is how are you staying safe? Is it that gold as your hedge, or do you have any other? I call them ejection seats. So what are you flying around this market? What's your, besides the GLD or gold? What's your parachute, or is that it?
Love the pilot perspective and analogies here. Yeah. So I actually, at this moment, the last about a week and a half or so. I end in cash at the end of the day, so I don't have any overnight risk at the moment. And I've sort of cashed out and looking for the next move. I'm just looking for a confirmation if this is going to start to rebound and we see techs go up. Then I'll start to get into some FANG names on the call option side. Right now, it's just I'm kind of in no man's land personally, and I think a lot of investors feel that way too.
That's good to hear, and it's good to translate to a lot of the retail folks that are sitting here itching to do something. When you hear some of the pros go, I ain't doing anything. Like I said, if we're reaching over and pulling your lap belt tighter, it's turbulent. So
can I mention one thing very quickly?
Yeah, go ahead.
In the institutional side, like institutional traders, a lot of newer traders assume that right now these institutional guys are double, triple their size in trades. Actually, professional money scales back because of the volatility and movement. There's a lot of volume, but over bigger price. So they're scaling back their contract size. So this is a good time to be smaller size and be more focused on risk management than ever before, because you get caught on the wrong side of this thing, it could really run away and cause damage.
It's funny you say that. I spent, this thing's like welded to my head, this phone. But over the weekend, I stand outside of the hockey rink talking to a lot of buddies that move a lot of big money. It was kind of a, well, you go first. Well, no, you go first. Everybody's kind of in this circular firing squad right now, trying to decide whether it's a great time to buy or if they're going to dump. It really does feel like everybody's sitting in this crowded movie theater, and I don't know if we're about to watch a really good movie or somebody's going to yell fire and people are going to get crushed. So
yeah, exactly.
Being in cash it's a one delta trade. So I appreciate that, George. All right, Brad, what do you got? What juicy trade do you have for us?
So I'm kind of nibbling at XLY, at consumer discretionary, and I've been hedging longs by being short emerging markets for a long time because of the trade wars. And obviously the emerging markets have dropped. What did you say earlier? 18% this year, I think. And it's been a very predictable downtrend, just a rolling downtrend. Shorted every time it hits the 50 or 50 EMA. And stay with it short until it starts to bounce back up and then re-enter positions. But I like consumer discretionary going into Christmas. I think because of tax cuts, people have been putting a little extra money away this year for Christmas sales. And I don't see a ton of downside on my chart. I mean, it closed Friday at around 108. There's a ton of support at 105. If that breaks, there's more support around 100. So I'm kind of nibbling consumer discretionary for a post-midterm election rally and strong Christmas retail sales. Even today, retail sales report not quite what everybody wanted, but it did show growth. So
excellent. All right, Toni, your turn.
All right, guys. Well, with earnings season underway and all of that fun jazz, we're going to have a lot of securities that are going to be doing these gap plays that should have some decent follow through for like a week or so. And what we also see with a lot of the gappers is you might have a gap and then just like nothing happens for a week or two. You guys have all seen this, right? And then a couple of weeks later, it'll take off in the direction of the gap again. So when I'm looking at the markets over the next couple of weeks, I'm going to be looking for a lot of those things like plays today. You've got LLL, HRS. So we've got some really nice gap plays going on that have that continuation power. Are they going to have the same momentum as the day of the gap? No. I mean, like L3 Tech, you've got a gap that's been in a trading range throughout all of 2018, and now it's finally trying to bust through the upper end of that range. So intraday, this is going to attract a lot of attention for people that are like, what do I do right now? The market's so crap right now. What's actually moving? So I think that those things are going to grab some attention. We're trading like TLRY still. It had like a nice swing trade set up a couple days ago, but these are like kind of like more aggressive type of plays. But like I said, it's a swing trade environment right now. It's just, don't get hung up on things like Twitter and even Netflix, maybe, man. Netflix could be one of those, hey, it has like a really strong day with earnings, but then just like doesn't do anything for a couple of weeks. And then you see follow through in a few more weeks where it has a really strong swing play again.
That's a great point, Toni. I stopped trading earnings a long time ago because it really is a coin flip. I mean, I remember, I wasn't hatched here. I was yo soy retail trader, and I'd get the earnings right, like they crushed it, and then the stock's down or something like that. So I earnings for me are popcorn trades. I'm not a swing trader, so in these type of moments, kind of like a George, sit on your hands a little bit. I think that's all great. I think you nailed it.
Yeah, I love actually trading earnings, but I don't trade like whatever the news is. Like most of the time I enter a trade, I have no idea what the earnings on the security were.
Exactly.
I'm trading what the pattern is.
There you go.
If it has like a daily strategy that's breaking out of some sort of channel, that's where interest is going to be. If it's an extreme gap, it could be it got overrun. So then you get like downside, for the first couple of hours. But those first couple of hours of trade are usually pretty good. And you can get some strong trends into like 10 o'clock, even with like the first 30 minutes or so. But I mean, it's a fun market to trade right now. And the last month or so has been really dull as far as like overnight movers and gainers and shakers. There just hasn't been anything out there. So for me, this is like one of the most exciting times for the market. And then you add all of the volatility with what on earth is so-and-so going to tweet right now? I have no idea. And interest rates rising and elections coming up. And it's like, people are just going to be tripping all over each other. It's going to be fun as long as you are going for those bases.
That's awesome. Focusing on the base hits. I to be honest with you, I'm just not that smart to trade. You sound like you're awesome at it, but I can't do any. I used to trade like, the at the money straddle or strangle around earnings, because historically it would move this much and stuff like that. At the end of the day, I'm getting old, and I doing public math, I am just not good at. So that's why I usually sit on my hands around earnings. But it is.
You guys trade Bitcoin? Anybody here?
Bitcoin. I think we agreed we all have to do a shot if anybody mentioned the word Bitcoin on this thing. So
here we go.
I'm not drinking, so no.
David, we need another hour. No, I don't trade Bitcoin. I'll let Brad cover that in your wrap up here. Because I
don't trade Bitcoin. I was just curious. I know you guys are more futures oriented than I am. If any of you are trading Bitcoin futures,
I had a sell order of 20,100 US. I wanted to pop and flush out some of the buy area, but I missed that whole downside. I'll be honest with you.
Oh my gosh!
I gave it with my traders. Those were asking about it. But it was back, when the market was first turning around back in January, February, and March, and it was just okay. You know what, guys? Just go pull up a chart of 2000 of the Nasdaq and just trade the same moves if you really want to trade it. You have fun right there. It was like trading Forex 15 years ago.
Yeah.
I just wanted to sorry.
No, I was just going to say, as an equity options guy, I don't trade stuff until they make options on them, because that tells me that it's kind of
exactly the institutional market. Like for Bitcoin, one thing I've been tracking along I find very interesting, because this is the first time the markets are selling off a little bit more broadly with this intensity. I was curious to see if Bitcoin will be the benefactor of some reallocation flow off of equities and maybe some money coming into Bitcoin, a safe haven. We didn't see that. We actually saw it correlate to the downside with equities. I think that was an interesting point of its history, if you will.
It's a great point. Like I said, I only trade. I think it's quote grown up or matured when they start having options on it. Let me just give you a kind of a brief from some buddies up in a big building with 5 sides. If you've seen it, it doesn't get reported massively that often, but there have been some pretty big hacks of Bitcoin, and hey, 60 million went missing this day from this. Let's just say that our enemies, we'll throw North Korea in there, even though President Trump loves them, Iran, Russia, China, we've all briefed each other. I mean, literally, we could all wake up tomorrow and everything says 0 on your screen. It can be wiped out with a keystroke. We all have that capability to do that. The reason that hasn't happened yet is because we've all told each other like that will be considered a first strike. You mess with our financial system, it's akin to a nuclear strike. We have not briefed anybody in the world on what?
Interesting.
On Bitcoin. So
you guys have all been trading back around when Forex first started coming out, and like there was no real consistency. I mean, how many people lost everything back then?
Yeah,
that's how it feels right now with Bitcoin. It's like the same type of situation.
There's
except now you've got all the international drama too with.
Correct.
Exactly.
And We haven't. So there are some bad. I can tell it's. You can Google it, so I'll talk about it. North Korea. North Korea is hacked in and takes a lot of this Bitcoin stuff. So you could wake up one day and that Bitcoin's at zero, and Donald J. Trump ain't going to care. You wake up tomorrow and all of our bank accounts are at zero. It's a different thing. It is. It's considered a first strike, but Bitcoin and the cryptocurrencies haven't been put in that kind of do not touch this bin. So buyer beware with all that stuff. Real quick, out of me, I call it a Captain Kirk trade. It's funny that down in Brazil, we've kind of tagged this guy as the Brazilian swap drainer, the Brazilian Trump. He was a couple tenths of a point from winning outright, but there's going to be a runoff at the end of the month. Take a look at the EWZ. I know we kind of beat up on emerging markets, but take a look at the EWZ. This thing has had a rip. We talked about getting into it a couple weeks ago as kind of they pasted him with the, hey, he's the Trump of Brazil. The EWZ's seen this rip your face off rally, really hasn't given anything back. Here's kind of this, the world's ending. Well, here's where we are. It might be a sell on the news, but if they believe the Bovespa and the Brazilian economy and stock market's going to turn around like kind of a Trump did up here, this might be some, hop in your jet and go to speed of light out to Jan 21 and buy some deep in the money calls. So that's kind of my Captain Kirk trade. Quick, real seasonal one. I think, Brad, you were talking about this. I like the XLY, but also the XRT. This is a good seasonal trade. If you go, you can almost set your clock or your calendar to it every. I actually have a calendar reminder, and it came up today. Every October 15th in my phone, it says get long XRT. Every year. Every year, Brad, every year it seems like.
I argued with myself last night. Do I want to go with XLY or XRT? And I just like the chart a little bit better on XLY right now. But yeah, they're both great this time of year.
I'm doing both. It's funny because every year it seems like the retailers, they sandbag, they underpromise and overdeliver. It's going to be awful Christmas and this and awful. And then a month from now, we're going to be seeing people beat the hell out of each other for flat screens at Walmart. And then Amazon's going to say, we've never seen anything as disgusting. We're printing money. So a nice seasonal trade is an XLY or an XRT. It always has this rip your face off rally until when? The middle of January, when it's sell on the news. They actually come out with their earnings and go, we can't believe the holidays were this good. And then they give it all back. So good seasonal trade is an XRT or an XLY. And then I'm going to end on this, and then we'll wrap up around the room. Like I said earlier, man, if listening to 4 or 5 pros today it makes you a little, if there's a question mark over your head right now, if we don't know going lower, maybe buy some STS calls out a couple weeks, go deep in the money, maybe buy some point. Maybe these 36s, we took a look at buying the 35s on Friday. And the SDS is the ProShares Ultra Short. What's that mean? It just flies inverted, man. As the S&P implodes, this thing pops. So it's kind of hanging up here on a ledge, meaning if any of these events any of us talked about this week kind of go, literally it's like somebody standing with a paper bag blown up behind somebody. There's a famous picture of a bomb squad guy, like in training, like over this, in his big bomb squad suit, like trying to cut a blue wire, and a buddy sneaks up behind him with a brown paper bag and like pops it behind him. I think the guy died of a heart attack. But if you think it feels like we're like that right now. So I've never lost money on a hedge. That's me like saying, hey, flying around with this ejection seat I'm sitting on is wasting gas. I wish I had 800 pounds of gas. That's when you get shot down, man. So you never lose money on a hedge. Nobody, I guarantee you, none of these pro traders that have been giving us great info today, say, oh, every month I write a check to USAA, I feel like I'm losing money on my auto, home, and life. You actually, it's on debit, right? It's usually on automatic debit, and you even forget you have it until when you need it. So please be safe, man. Throw some calls on here, some long SDS calls, and if they go out worthless, you slept better at night. But if you're lying in bed going, holy crap, man, if this thing rolls over hard, I'm in a world of hurt, you're trading wrong, and that's not good. So, all right, folks, I'll tell you what. Let's go top to bottom here. George, how do we get a hold of what you do, or do a test drive, or do something, man? I appreciate working with you today. Let us know how we can get a hold of you.
Yeah, absolutely. Wiz, with respect to insurance, it's the only thing I pay for that I hope to never have to realize the return.
Exactly.
I hope to lose every penny I put into that.
Exactly.
Yeah, it's been a pleasure. First, I want to say it's been a pleasure hanging out with you guys. Tony, Brad, Wiz, David, thanks for having me on board as a first-time guest. You guys been part of great company. And I think that to all the listeners, just surrounding yourself with people like us on the call is very helpful. And I have a lot of news sources that I go through personally, so I keep tabs on multiple outlets. And I'll end off with this. I'll say that it's not about trying to be right in trading. Choose to be profitable instead, because that alleviates the need for you to be right. And that's kind of what we do at TradePro Academy. We do order flow trading for day trading. We trade every day, 9 to 11 a.m. in a collaborative environment in a team room. Our YouTube channel is our best resource. So I'll just put it up on the screen here very quickly. If you go to YouTube,
right. Absolutely.
Yeah, and type in TradePro Academy. Every morning we go live at 9 a.m. for 10 minutes. We kind of do a little bit of this, but just alone. Maybe I'll invite you guys out for YouTube. It's more fun this way. But at 9 a.m. we'll do an update, what to watch for, some key levels. And then the last thing here is if you go, and I think David will probably paste the link, tradeproacademy.com/3 secret indicators. Marketing said that will convert well. They're not secret, but I guarantee you one of them will surprise you on how it's used and what it is. So I'll leave that there. But the word secret will make you want to put your email in there. So you can't argue with stats. But I'd love to give them to you guys. And I think they're great, and you're going to learn a bunch from it. And thank you so much for allowing me to be here, guys.
You bet. Look forward to working with you again, George and Brad. How do we get a hold of you and what you do at ETF Dynamics?
Well, I never want you guys to get hold of me again.
Exactly.
No, I'm kidding. I have loved this. I think this is so much fun, and you guys are all great. And I have really also, like George, a first-time guest, really thoroughly enjoyed it. And I liked being the only cautiously bullish person in the room today. Because I
totally took the other side of that trade, man. I'm taking it with both hands.
Yeah, I love being the contrarian. Visit us at etfdynamics.com, and I know David's got kind of what we call our ETF sector report that comes out quarterly with kind of the ETF hot list for the next 3 months. We'll be coming out with a new edition soon. Get on our mailing list. David's going to share that link, or you can just visit etfdynamics.com. Download another ebook that we have there on ETFs, especially if you're new to trading ETFs. And we offer an alert service that every couple of months we open up free trials. You can sign up for that as well for a free trial on our website.
Awesome, Brad. Great working with you.
Thanks, Brad.
I just want to echo Matt's sentiment. Be safe right now. Hedge. Be very careful. It's going to be bouncy.
Yeah, it's tighten the lap belts, folks. And Toni, tell us what we can find at ToniHansen.com or how to get a hold of you.
All right. Well, apparently my next bid is going to be for a public office here. We're going to be so I might be converting it. So yeah, I mean, I've ran the website for about 18 years now, and I ran a trading room for so long. I got completely tired of doing it. No offense, you guys, but when you're there 24/7, you sometimes need a break. So what I do now is I run it part-time, but it's live chat, and I'm actually teaching my traders how to read the market. So like when we're talking about things like momentum, it's like, what does momentum mean? How is it like figure in the grand scale of things? When we're talking about trend development, how do these things work together? And like even today I gave a class on trend development. We absolutely nailed the positive high as we were in class, and it's because of using the real life education. So you can get a trial of that. Just go to ToniHansen.com/community. It's called League of Traders. We meet every Monday where I teach you guys something. Every Tuesday and Thursday, we do live training and trading. So it's basically whatever trades pop up during those couple of hours. I trade so many markets, you guys. As you saw, I might have a little bit of ADHD or something going on. I'm kind of all over the place. But I trade where things are moving. If it's gold one day, great. If it's earnings another day, great. And but the great thing about that is that once you know technical analysis, it doesn't matter which market, which time frame you're trading. I mean, all of you guys know that. I mean, we've seen so many different markets. You guys have all said that you've changed, kind of how you focused over the years. And I think that's the great thing about when you're learning how to read pure price action and you're focusing on things like momentum. So, go to ToniHansen.com/community. Come join me, chat with me during the day, and we have a pretty good family there going on.
That's awesome. The best part about what you all just said was the League of Traders. It sounds like we could all be like 4 superheroes or something like that. And,
right?
I want to be Captain America, the League of Traders.
I'm a little bit of a geek, so
I love that. No, just the name itself that's phenomenal. And if you, Toni hit on a big point here, folks. All of us as professional traders, we've learned some serious lessons. Don't go out and relearn 5 times that the stove is hot. You can kind of, NASCAR, you can draft behind somebody for a while there and then, shake and bake, to use a Ricky Bobby term, around that. So it's Toni's got a lot of experience, Brad and George. So pick our brains, folks. Real quick, before we sign off, you can just head to TopGunOptions.com and you can scroll down kind of. Well, it's like I said, down here in God's waiting room. It's about 90 degrees outside, but heading up to Vermont this weekend, and hopefully it'll be a little chilly. If you're used to skiing, you'll recognize the green, the blue, and the black there. The black, nothing other than you can get access to all 3, or actually all 4 of our live trade briefs here at TGO for what essentially is a pretty cheap bottle of Pinot Grigio, $38, 2-week test flight, and David will send out the link to that. It's go.topgunoptions.com/go-flight. Go-flight, kind of like Apollo 13 there, because I ain't seeing first man. So, all right, George, Brad, and Toni, great time. So, David, hopefully you can have this clan back, because I think we did some good work today. I actually learned that, and that's the mark of some smart folks, that I actually learned a lot from you guys, and it was a pleasure interacting with you, and I look forward to working with you guys again. Thanks. Yeah, you bet. David, back to you, my friend, and thanks for having me. I appreciate it.
All right. Yeah, I've been looking forward to this episode. I knew it would be a really good one. So, yeah, it was great. Great having you all here. Just a reminder to everyone, be sure to subscribe to Timing Research on YouTube and wherever you listen to podcasts. Also, be sure to join us tomorrow for Analyze Your Trade. That'll be Tuesday at 4:30 p.m. Eastern Time. Dean Jenkins, Jim Kenny, and Neil Batho will be on for that one. Also, just want to thank all my guests again for this week. George Papazov of TradePro Brad Powell of ETFDynamics.com, Toni Hansen of ToniHansen.com, and Matt Buckley of TopGunOptions.com. Thanks, everyone.
Thanks,
David. We'll see you guys.
Thanks, guys. Love this. Have a great day.